Welcome back to my series on Finance 101. Here's everything I learned in school for finance and economics. Today we're going to be covering hedge funds. What is a hedge fund? What does it do? And why is it so controversial? So, a hedge fund is an investment vehicle for investors to pool together their funds. That fund will then be managed by a hedge fund manager, and the intention of the fund is to make money for their investors. Now, typically, hedge fund investors want to make more money than what the stock market makes. The stock market does 10%, they want to do 15 or 20% or even better. So, if a hedge fund does really well, there is a high reward for the hedge fund manager. They get paid in a classic 220 structure. The 220 structure is 2% of the total fund's value plus 20% of all the profits above a certain amount. So, if they beat the stock market, they take 20% of the profits plus 2% of everything. And as you can imagine, this is a very lucrative industry. The hedge fund industry has produced quite a lot of billionaires, with finance being the number one industry for producing billionaires. Therefore, there is a really high reward to being an extremely successful hedge fund manager. The issue is this is extremely hard to do. Majority of hedge funds go under, and the majority that beat the market are even less. So it's extremely difficult to be a successful hedge fund. But that also brings up another issue. The hedge funds that survive, as opposed to the ones that go down, tend to be the ones doing things that are fairly unethical at a variety of times. Market manipulation, front running, insider trading are all commonplace within some of the biggest and most successful hedge funds that has resulted in a lot of public backlash. Namely, look at the GameStop fiasco with Robinhood, giving information to hedge fund managers to be able to screw over everyday investors and traders. And this is not just one hedge fund or two. This is across the board because of the survivorship bias. The honest and good hedge funds typically go under, and the ones that are unethical but able to get away with it are the ones that survive. So it's a very, very tough industry, but it's very rewarding, and it does have incentives for being a cheat and doing things that are unethical or straight up illegal, because if the fine is less than the amount of money you made, it's no problem if you get fined $1 billion for investor trading, but you made $3 billion. It's not really a fine. It's just the cost of doing business. If you enjoyed this video, stay tuned and follow for more.